Hello, traders. Gary Wagner here. 13 minutes after 1 o'clock in Honolulu, 13 minutes after 6 in New York on Tuesday, December the 7th, 2021. And this is the Daily Report for gold and silver. We had respectable gains across the board in the precious metals markets. Gold, basis the most active February contract, gained $5.40 in trading, 0.3%, and is currently fixed at $1,784.90. Silver had a strong gain of 1.18%, a total of 26, with the most current futures contract currently at $22.52. There was slight dollar weakness. It was stronger earlier in the session, but came down, currently down by 0.05% at 96.28. A respectable move in gold and very strong move in silver today, with gold gaining a little bit over $6. It is currently trading overseas and is currently fixed at $17.8460. What I find most interesting in terms of our technical data is the close that was achieved today and how that close matches almost to the T the 78% retracement, which is a retracement from the rally which began at the beginning of November to about the middle of November. We are currently trading overseas. It's at $17.85, right at that line. It's only a couple of days from now when we will get the most current CPI inflationary data. Right now, projections are coming out as high as 7%. Realize it was 6.2% in October, and I believe about 5.8% the month prior to that. There is absolutely no doubt we have spiraling inflation. If it does come in at that level, 7%, it will be the first occurrence of inflation at this level since 1984. If inflationary pressures do run that high, even though we acknowledge that the Federal Reserve is going to act and act quickly, they still have to accelerate and complete the tapering process before they can raise rates. However, there's a lot of talk about there being 3 or more rate hikes in 2022. As we speak about in our opening letter and have talked about on many occasions, you cannot raise interest rates quickly to temper inflation without it having a severe and detrimental impact on the economic recovery. There is no strategy that would achieve lower inflation and a growing economy. And for that reason, the Federal Reserve is going to put themselves in a balancing act, walking a tightrope that I believe is almost unattainable in terms of achieving those goals. If, in fact, we do see gold move higher, because if it comes in at 7%, there will be bullish momentum in the market. We would look for a couple of different points where gold could go. First, it needs to close above $17.85. That's a 78% retracement level. And then, as we've spoken about, our real level of resistance comes in a band between the key psychological number, 1,800 per ounce, and call it 1,805, which is the 61.8% fib retracement. That is a very logical point we could see gold go to rather quickly once the numbers come out, if they actually indicate that our inflation level is the worst since 1984. As far as silver goes, it had a very respectable move up over a full percentile in trading today. What I like is the fact that it is above a key level we've been looking at, the 78% retracement at $22.32. It opened and closed well above that. One other thing is very noteworthy, and that is when we convert our candlestick into a Heikin-Ashi, we are seeing similar action as we did in gold, in that candle size has gotten smaller. We have seen the occurrence of upper wicks. We now have a pivotal candle, which is today's candle, and this new candle, which is forming, is green. That's much too early to tell, but typically, whenever we look at corrections or rallies, we look for them to terminate with a candle that is very much like a doji candle, as we see here and as we saw at the top of the market on November 16th. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.